Hi there, everyone. Welcome to another Ainslie's Gold and Silver Standard Insights. I'm Joe, and as always, we are joined by Mr. Chris Tipper, and joining Chris today is Alex Hutchinson. We've had Alex on the show before. She's a director of one of Australia's largest precious metals refiners, that's Siltec Precious Metals Refinery, and also the Australian Minting Company, as well as companies in the manufacturing and property spaces. Now, what we do here at GSS Insights is we break down the morning's news, and that was shared on ainsleyBullion.com.au. I'll share that screen right now, and Chris and Alex are going to talk upon this topic, which happens to be the hidden traps behind Australia's awesome unemployment rate. Please go ahead.
Thanks, Joe. So the news today is once again highlighting the need to be able to analyse and understand these reports that regularly come out from various government departments about the health of the economy, as we increasingly find that the headline numbers tend to mask what's really going on. So last week, the Australian unemployment rate dropping to 3.4%, that's a perfect example. Of course, a falling unemployment rate will always seem like a positive, as we'll be quick to jump on the assumption that this is the result of more people getting a job. But a lot can be hidden in the definitions and the underlying reasons for the results that we get. This was highlighted in the news article today, with over 40,000 jobs actually lost, not gained, yet the unemployment rate fell. So just looking at the headline numbers isn't enough. We'll need to dig a bit deeper. Alex, you're just the right person to help us do that digging, so thanks for joining us here today. The first question that's bugging me, and that we've talked a little bit about on Insights recently, regards the RBA. They keep saying that a driver behind the increasing rates will be increasing wages. Is that what we're seeing? What did last week's job report numbers actually show?
So the RBA does keep referring to that they need wage growth in order to raise rates, and that's what's driving all the currencies in the world at the moment. In fact, their statement at their last their statement in the last jobs report was that broader measures of labour income growth are expected to increase at a faster rate than wage price index over the forecast period. In fact, they were forecasting around 5% wage growth this year. And then last week, the ABS came out and said, actually, it's going to be 3%. And then on top of that, then we had the jobs report last week only at 2.4%. So we are miles off their forecasts. And traditionally, the RBA, this is one of their weakest forecasts. They always overproject wage growth. Wage growth, yes.
Right. So I know last time when you were with us here on Insights, you were highlighting the significant impact that the participation rate has on the jobs data. And it seems like something that we need to really be paying attention to. But digging a bit deeper on how the RBA is likely to respond, what data do you see them looking at to forecast the high wage growth pressure that they expect to see?
So the RBA can only look backwards, because the data they get is, so the wages data for August is actually June data. Now, if you look at what happened in this report, the unemployment rate dropped to 3.4%, which, as the Ainslie News says today, was an awesome result. But if you actually dig into that number, it was actually a drop in jobs of 41,000. It was and then we had 87,000 full-time jobs lost, and that was on a back of a forecast of 25,000 jobs gained. So that was what the market was anticipating. So if you actually look at what the RBA keeps saying, we're going to keep raising interest rates quickly. All of the banks around the world are currently saying that, but they are looking at some very backward data that is changing very rapidly. So if you look at what the RBA is projecting this on, it's on the back of that massive COVID stimulus that came through. It's on the back of no immigration. We had closed borders, no one was coming in, there was no one to fill any jobs. And normally we have about 120 to 160,000 immigrants every year. And then on top of that, we've got the participation rate, which everyone talks about now, because we've got all the boomers retiring. So we had a participation rate drop from 66.4% to 66.2%. So There is only weakness I see in what the employment data is telling us, and that is being emphasised by wage growth as well. It's just not there.
Yep. So is there anything else sort of there that they're not looking at? I mean, you've highlighted a few things there that they're not looking at. I don't remember really hearing immigration numbers come into these calculations. That seems pretty important. Is there anything else that you see that really is going to project, like going forward, is going to impact these jobs figures, or more importantly, whether we are going to actually see wage growth that they're just not looking at?
So if you look at, we spoke about this last time when the US job figures came out, where you've got the government working fundamentally against the Fed. So you had Biden adding stimulus when the Fed's raising interest rates because inflation's too high. Well, this last week, Albanese announced that he's going to cut some red tape around immigration. So we currently have a backlog of unprocessed temporary visas of 570,000. Now, they're only the temporary ones. They're not the job openings so that'll only partly fill sort of part-time jobs. But now Albanese has said that he's going to open the border and allow somewhere between 160 and 200,000 people a year into Australia for these jobs because there are shortages. Now, the last time this happened, the peak immigration that we have was in 2008 with Rudd. That was around 316,000 people coming in. And we're looking at 570,000 visas and 200,000 full-time people coming into Australia. I can't see wages going anywhere when we've lost 41,000 jobs.
No. And well, the flow-on effect of that, like that's not an overnight change. That's something that has a long-term impact as well, isn't it?
Yeah, especially with job numbers dropping. I cannot see the wage growth that the RBA wants with the government working against them. And that fundamentally means that these rates just don't have much further to go.
Right. That's some great insight. And that sort of aligns with what I've been saying about rates as well. I find it difficult to believe that we can really keep pushing. And you've added some new information there that we haven't talked about before, because I think we do need to consider weighting some of these things into the broader discussion, because often people don't talk about some of those aspects, and they are important and they do matter. I suppose the final question that I've got that I'd love to hear your opinion on, putting all of that together, what does it mean for the price of gold and silver? Something that you're passionate about, I'm passionate about. Do we see more sideways action from here? Because we've been seeing a lot of that lately. Or is there something in this report or in this data that leads to a potential breakout ahead?
As soon as the world realizes what I speculate, which is that interest rates do not have much further to go, gold should go up with it, because fundamentally gold is better on lower interest rates. It's always gone up during those environments. And, the world is speculating now. I think Australia, the forecast was for peak inflation at 3.6%, I think. And now they're talking 2.8%. So
it's dropping quite rapidly.
Yeah, like from one report to the next, it's dropping 4% worldwide. So yeah, we'll wait and see, but it should be positive for gold.
Great.
Fantastic. That is some excellent insights. And once again, thank you so much, Alex, for joining us today. Chris or Alex, are there any further final comments before we do the old wrap up?
I think it's really good to hear Alex's perspective on that, it really highlights what we've been talking about, that you need to dig, like with all this stuff, it's not the headlines. You see a headline, a small drop or a small increase, and wonder why the market reacts in in some ways a disproportionate way. You get a big reaction. It's because when people start digging into the actual data, there's a lot there. So I think it's really valuable to have that conversation and to get some of Alex's insight there, because some of those things are not things that I was thinking about prior to today. So yeah, I'm keen to follow along and see where some of that leads us.
One thing that we did miss was just the output rate for people per person. So currently, if staff are asking for wage rises, which they're entitled to, and they're under huge inflationary pressure and they should have it, but the output rate per worker has dropped 4.6%. So businesses do not have capacity at the moment to give wage rises as well. It really is a catch-22, that it's not just businesses that are suffering. It's not just individuals that are suffering, it is businesses. The record profits that everyone was thought were going to be there, they're not there. And so, you know, everyone's in it together. The pressures that are going on in the economy right now are going to keep hitting everyone.
Yep.
Well, thank you once again, Alex. We love having you on as we did previous, and we certainly hope to have you on again. Always great to have you. As always, thank you, Chris. We'll end it, of course, just by sharing the screen, because what you do need to do is, if you want to continue the conversation, myself, Chris Tipper, possibly Alex as well, if she has time. Once this video is uploaded to YouTube, we're going to share it to the Discord channel. That's discord.gg/gold, discord.gg/gold, and join that, and you can chat with one or more of us as soon as you see this uploaded. And also, you need to hit the big red subscribe button here at the Ainslie Bullion YouTube channel, because GSS Insights Monday to Thursday, and lots of other bullion-related topics as well. So once again, thank you, Chris. Thank you, Alex. And as we always say here at the end, balance your wealth in an unbalanced world. Take care, and we'll speak to you soon.